Hey everyone, it's Tom Buck from the Calder Group. With everything that's going on at the moment in terms of stock market performance, concerns about investments and pensions, I thought it might be worthwhile to have a chat with someone who can hopefully cut through the emotion, the fear and the concerns and start to put a little bit of common sense, if that's the right word, into what's going on and take away the noise of the media. So we've got Alex on here from Blackfinch Wealth. Hi, Alex.
Hi there.
Obviously, we work together. I've done quite a bit of due diligence with you over the years. We use you for the clients where it's appropriate, and your style of investment and your approach works nicely. And obviously, with what's going on at the moment, you're probably rather busy.
Yeah, just a bit, yes. It's testing times for sure.
So thank you very much for taking the time out to answer the questions. Really, I just wanted to put 6 questions that we tend to be getting from our clients at the moment, see what your thoughts are, and hopefully try and get a bit more sound, sane information out there.
Yeah, perfect. Hope so.
Okay, so if we start, the basic one really is, considering the media reports about the market turmoil, what's going on, what they're saying is the reason behind it, what is actually happening and why?
Yeah, so I mean, over the last 4 weeks, really, things have escalated quite dramatically, and it's kind of a sort of a 3-pronged attack, really, on the markets. Firstly, as we were all aware around Christmas time, sort of an outbreak of this virus within China started to concern investors over in that region. But over in the Western world, we were broadly immune to that outbreak in the markets. Now, as we came into the second part of February, it was quite apparent that was more of a severe outbreak than investors initially expected. And as we saw cases spread across the rest of the world, that really is when investors sat up and paid attention to the potential severity of the situation.
Yeah.
So that kind of kicked off around the 19th to 20th of April. Very soon after that, the second prong really was around the Russians and the Saudis. The Russians actually reneged on an OPEC agreement in terms of controlling supply of oil into the market, and that kind of sparked a war between the two nations, which drove the oil price to collapse in value pretty much overnight. We started off around $70 not that long ago per barrel, and we're down around 30 now. So we had an enormous oil shock to the market, and the repercussions there were quite severe. That was obviously on the back of the severity of the virus case spreading. And then finally, the third one, which isn't really getting much attention at the moment, but we're quite sure it will do in the coming months, is the US presidential election. So that was always a fairly prominent feature. But obviously now the news really only just reports the virus and the spreads there. But underlying in the markets, yes, there's some concerns, if you like, about the direction of the US presidential election as well. So those 3 prongs all coming together at the same time really have had a very unsettling impact on markets. And one thing that markets absolutely hate is uncertainty, and we've got plenty of that at the moment.
Yeah, so it's not really all down to the coronavirus. It's a mixture of things that really timing has just brought all together, and hence why we're seeing these wild, volatile movements on the markets.
Yeah, correct. I mean, with the virus especially, it's the absolute unknown, and it's known in how far, how quickly will it spread, and also how quickly can this be contained. We are, I suppose, in the fortunate position in the Western world to not have had to have dealt with outbreaks of this nature, in a generation or more. So governments aren't actually that prepared to deal with outbreaks like this, and over in China, and they are more prepared, if you like, and arguably the outbreak has been handled quite well over in those regions. And what isn't getting reported enough is the lack of new cases that are being added in these regions, and that is largely down to the strict control measures that those governments put in place, and it's starting to pay off now. But we unfortunately are some way behind that curve, and it's the absolute unknown which the markets are reeling from at the moment.
Absolutely. And obviously when we talk about investments, we always talk to clients about having a mix of assets, and how is that actually managing to hold it? Because all everyone hears is the stock market has lost, what, 30% of its value in a matter of weeks. What is the benefit of that asset mix, and how is that impacting on the work you're doing?
Yeah, perfect. So there's been no better advertisement for a globally diversified multi-asset portfolio as there has been over the last few weeks. So that's all that we do at Blackfinch. We, as you know, manage a range of globally diversified multi-asset portfolios, and they are doing exactly what they're supposed to do. So you quote quite rightly equity markets, so particularly the FTSE 100, which your clients will see reported on daily, and US markets such as the S&P 500 are down broadly 25–30%, just a bit over, actually, if you look at the last day. Pretty scary numbers. Now, if we translate that into the sort of performance of our portfolios, most clients are kind of in the balanced range of the portfolios, so sort of in the middle of the road there. Those portfolios have actually experienced about half of that drawdown, maybe a bit less, so 14–15%. So while still not a pleasant experience to have to go through, it's considerably less than what's reported in the news. And that is exactly because of that multi-asset approach. So if we take a very broad couple of examples, things like government bonds, so loans that are issued out by the government, perceived to be extremely safe places to sort of put your money. They're backed by governments, and they're sort of the highest credit quality, depending on what sort of government you're looking at. Now, those areas have actually done very well. They've actually posted positive performance since the 19th, 20th of February, when this sort of escalation sort of really kicked off. Other assets such as hedging strategies. So hedging strategy is basically where investors can profit from a downward move in the market. We have some of those in the portfolios, and again, those have produced very minimal drawdowns, only sort of 2%, which again, when you're looking at 30% from equity markets, is held up very, very well. We also have investments in the portfolio within infrastructure investments. So we'll buy things like that look at sort of motorways and toll roads and things with very long life cycles and that are inflation linked, and again are backed by a lot of sort of government spending. So again, those investments have only drawn down sort of 5 to 7% over that stressful window as well. So we're seeing a lot of the investments in the portfolio behaving in quite a different way than the equity markets, which are reported on the news, which is exactly the point of a globally diversified multi-asset portfolio.
But of course, doesn't make a nice big headline, so therefore you're not going to see it on the 10 o'clock news, sadly.
Yes, quite right. Yeah, exactly.
And moving forward, obviously, as with any stock market correction or change, or whether it's up or down, there are going to be some winners, some losers. And obviously, I suppose one of the uncertainties is we don't know what the economy is going to be like coming out. We don't know what airlines are going to survive, etc. Are you starting to look now, though, at what sectors, what assets, where the future economy is going to grow, and where this sort of tsunami of changes might lead us to look going forward?
Yeah, I mean, I suppose one great example of that, and that's in the portfolios today, is what we're doing right now. So we're hosting this via a web-based conference servicing facility, naming no names, but the share price of this particular provider is doing very well recently. So the sort of self-isolation, working from home sort of advice that we're being given by governments and companies around the world are really starting to use tech. And actually, the tech sector is something that's held up very, very well during this sell-off, which has surprised a lot of people, because prior to this sell-off, tech stock valuations were extremely high. And normally stocks on those sorts of multiples and valuations will get very adversely affected in a drawdown. Now, that has not been the case here. So if we take a couple of examples, being Amazon and Netflix, for example, those two companies have actually held up very well. Yes, they've still fallen, but they've held up a lot better than the wider market, and it is because of that fundamental shift in consumer behaviour. So from a sort of sector point of view, that would be one example there. And then from an asset class point of view, we are sort of, personally, we are sort of really looking at our fixed income and our bond holding, and sort of moving more towards investment grade. The sort of downside to that is the returns aren't great. They're not very attractive, but the capital security is there. So the positive returns are minimal, but the capital security at these volatile times outweighs trying to chase a sort of more exotic return in the backdrop. Whilst everything is still so unknown, once we start to build a picture of how long this virus will be around for, any sort of potential vaccines on the horizon, and more importantly, when we start to try and see economies going back to some form of normality, then we'll sort of position the portfolios more for a more bullish outcome. But right now, yeah, we're sort of more on the defensive mode.
Yeah, again, let's get through the worst of the coronavirus. Let's work out where we're going as an economy, what the damage has been done, and then amend as you go forward.
Absolutely.
Yeah, that's perfect. Alex, thank you very much for taking time out of a busy day. Thank you very much for some wise words and cutting through the noise from the media. And yeah, let's hope we get through this sooner than later.
Yeah, okay. Thanks, Tom.
Cheers.